I've got three examples of top of cycle patterns. Again, we're going to be looking primarily, or at least starting out in trend red. And these three patterns are just normal patterns that you'd see for a peak turnaround. And the first one is on the red line, red vertical line, is a top of cycle lower trend red, and in fact that low has crossed under the green. And if you've looked mostly at uptrend stuff, you know that the trend red in a BOC pattern is down up down, so it's hit the bottom, it's going up, and if it crosses over the green line, then it has more strength and more power. Same is true here. When the red line crosses under the green, you are basically in the start of a downtrend. And when it does it on the same day as the initial BOC pattern, then it can indicate even more strength. Not always, but usually. The red vertical line is not on this day, but the day before the red vertical line, over here, with the red vertical line being moved over, we have what was referred to in the zip chart as a red-green peak. Now the green, the zip green, is only at 90, and so when the green is lower than the red, then sometimes you can get stronger downtrend, but not always. Moving the line back over to its original spot where the TOC lower pattern is in the trend red, we have a zip green that is down. And the normal definition for a red-green twin peak is that the lines are both up. And so this technically does not qualify on the red line day as a red-green peak. Although both of them are both highest on that day, it certainly works, and it's just easier for us to say that the red-green peak has indicators that are both up. And so in my heart, it's a red-green peak, two-day red-green peak, but it doesn't really qualify under the normal terms that we use. But you can see that there are several days down. It looks like maybe 10 or 11 days down in this example. And the thing that I want to point out to you, that this is also a big three on the peak example. You've probably heard me discuss about the big three pattern. That's the trend red, the power red, and the zip Zion being lowest. Well, in this case here, all three are highest, and they are divergent. Trend red and zip Zion are up in a low angle pattern, and the power red is down in a low angle pattern. I'm going to talk about the blue line now. This is the typical start of a downtrend. It is a trend red top of cycle, and this one stays above the trend green line. And so when that happens, it's a typical start of a downtrend. It can be a weak start, but in some patterns, it's the start. In other patterns, we like to equate the start with the crossover. So when the red crosses under the green, that's the start of the downtrend. But in any case, we also have a one-day red-green pattern on the day before the blue vertical line. But in this case, we have 5, 6, 7 days of congestion where the price is just flat. And if you look at the two lines and try to figure out what we've got, one of the things that sticks out in a big way is the location of the zip yellow line. The zip yellow line on blue is, the zip yellow line on the blue is at 21, and the zip yellow line on the red vertical line day is at 50. And the zip yellow line after the blue line continues to stay low, and does so on this day here where it bounces back down. The zip yellow line is at 21. So you can see it's real. We use a formula. If the zip yellow line stays under 20, then it is basically a downtrend, or in this case flat, because it is coming up a little bit. If it's above 80, if the zip yellow is above 80, then and stays above 80 even as it goes down, then we're basically in an uptrend. So always keep in mind where the zip yellow line is in relation to where you are on a peak. Going over to this green pattern, this one here is a typical start. Next day, or on this day, it is a top of cycle trend red. The red is above the green. It's a normal start. This day, however, is the first day that the Zip Zion hits 100. And when Zip Zion hits 100, with Zip Zion tracking buyers in and out of the stock, that would tell you that in all likelihood we are in a situation where we are going up, which in fact is true. But you can see that on the green line day, the ability to climb higher doesn't compare with the 2-3 days previous to that, and so they're running out of gas, as they say. And or more appropriately, they are running out of positions. And so on this green line day, it's a case. I call it an exhaustion peak, and even though the day after this green vertical line day is at 100 with both the Zip Green and the Zip Zion, there's what could be happening. I haven't checked the numbers on it, but what could have happened that day is there could have been some short selling activity, and the Zip Zion and Zip Green track trades in and out of the market, and so it's not likely that was part of it, but it is possible that it's picking up a little short trend activity, and we see the next day as a red doji candle, and the high to low is really short. I mean, the high is at 30.1 and the low is at 29.77, so it's up 22 cents or 23 cents. 24 cents. So that's 24 cents is pretty tiny on a $30 stock. So, and the reason I say that is because Zip Zion and Zip Green are still at 100. So it could be a situation where there's not a lot of people that entered or left the market, which is more than likely the probable situation or the probable case of the matter. But in any case, we have a trend red in a TOC, in this case higher pattern, which is typical, or which is normal to a downtrend start. the red stays above the green. And we also have the big three, trend red, power red, and zip Zion in as highest or in highest positions, with the exception that power red also has pink, power pink above it. And if you've heard me reference any videos before on exceptions, power pink is one of the price barometers, and that is an exception to the power red being highest. Or in other words, the power red qualifies as being highest even though the pink is higher. And it's not really an exception, it's just that idea that the red qualifies as highest and then becomes part of the big three. And this is also really a big four when your zip yellow is at 92. Zip red is, as you can see, is a little lower at 79, but they're with the zip yellow at 92, it gives us a significant opportunity for the yellow to drop, which it does, and it looks like it's 15-20 days to the bottom. So and be conscious here. Look at your trend yellow line. It's traveling pretty flat. The trend yellow on this day is -12. Trend yellow on this day over here, when it's actually going up, is -11. So it's pretty flat going across there, but the red and green lines bounced up all over the place. And so when you're thinking about being in a swing trade where you're in for multiple days, keep an eye on your trend yellow line under zero, because when it's traveling under zero and it's relatively flat, the downtrend will continue. And especially if you get some red peaks and that type of thing. You've also got power red or power orange highest, which means all the other lines are under it for looks like maybe 10 days there. It ends up being pretty flat in this area here of about from about here back going over to this big red candle. Bunch of congestion going on, but even so, it's a situation where you could theoretically just stay in the trade. Personally, I probably would, like on this day here where you have a trend red that's real flat on top of the blue line, and it's indicating the second day of a power, the second day of a right leg larger trend red pattern. That a trend red right leg, especially a larger pattern, says it's going up. So I probably would have gone out of that day or bought it long and then stayed in it those 2 days. And then when you can see on this day right here, trend red is above the green line. It's crossed over the zero, the green line, which is the zero line. I guess I said that wrong. The zero line is actually a green line on the trend chart, so I don't want to confuse you. But it's crossed over above the zero line, and if you listen to any videos at all, there's been many references to when the peaks of these lines go over the top of other lines, and just by a little bit they have a tendency to reverse right back down. And that could literally be proven if you went down into your power chart and looked at your power red, because power red is your position indicator, the best in the system, and when the power red is under zero, traveling under zero, it stays, the price stays down, and when power red is over zero, the price stays up, typically. Okay, obviously red has to cross over zero, above zero at some point, so it does go up, but I think you know what I mean. All that being said, these are some typical examples. The difference I think I pointed this out, but on the red line you had the power red in a low angle. I remember doing that now, but the power red is in a lower TOC pattern, and that's quite significant, and that drives us down quite a bit there for about 10 days. So forgive me on that. I saw it and I thought I forgot about it. But that's a good analysis of TOC patterns and how they typically identify a start down if you're looking for a uh, uh, possibility to buy something short, because those are strong indications. Keep your uh, short-term trend lines in mind when you do that as well, and as with all the other conditions, because the indicators will tell you what's happening. They really will.